Well, Fed Vice Chair for Supervision Michael Barr is speaking right now, previewing a proposed package of revised rules for the country's biggest banks. Here with the latest, we've got our very own Jennifer Schonberger. Jennifer, great to see you. What do we know so far? What are we hearing?
Good morning, Brad. Great to see you as well. The Federal Reserve unveiling its planning sweeping changes to massively scale back a proposal to raise capital requirements for the nation's largest banks after politicians and banks had pushed back on an initial plan, warning that it could restrict lending and hurt the economy. The new proposal, known as Basel III, would increase capital levels for big banks like JP Morgan and Bank of America by 9%. That's down from half of the original plan from more than a year ago that set the capital increase at 20%. Now, banks with assets of between 100 and 250 billion, which were initially subject to the stricter standards of the largest banks, would no longer be subject, other than the requirement to recognize unrealized gains and losses of their securities and regulatory capital. This is a major reversal following a string of regional bank failures last year led by Silicon Valley Bank. Fed Vice Chair of Supervision Michael Barr laying out his vision this morning in a major speech here in Washington at the Brookings Institution, saying, quote, "Capital has costs too. As compared to debt, capital is a more expensive source of funding to the bank. Thus, higher capital requirements can raise the cost of funding to a bank, and the bank can pass higher costs to households, businesses, and clients engaged in a range of financial activities." This is certainly an about face for Barr after even colleagues on the Federal Reserve Board, including Fed Governor Mickey Bowman, had voiced concern about this in addition to the banks. Barr says that today's proposal reflects public comment and that it improves the tiering of the proposal and better reflects risks. Now, these changes were made in concert with the FDIC and the Office of the Comptroller of the Currency. All three of these institutions would need to vote in concert to finalize this new proposed rule. Barr says, however, this is just an interim step at this point and that the Fed is taking comment on this new proposal. Guys,
all right,
back to you.
Jennifer, thanks so much for laying that all out. And we would be remiss not to say happy birthday, Jennifer. Thanks so much.
Oh, thank you so much.
Appreciate it. We'll talk later.